The Asian Financial Forum 2011 is set to be a platform for major topics, including the future role of the renminbi and green technology in China. Presenting his paper in a key workshop is Dr Kenneth DeWoskin, Director of Deloitte China Research and Insight Center. So looking more broadly to begin with, some people may say that China is holding up the sky economically when you see the developed world actually not looking so good. So what's your view, bearing in mind also for the international trade scene?
China's had a very exciting growth story, even through the financial crisis and certainly in the years afterwards. Government stimulation policy has been very successful. There's no argument about that. So successful, in fact, that it has created certain challenges and imbalances in the economy that need to be addressed. So moving forward, I don't think any wise investors are betting against the Chinese economy, but the leaders themselves, every time they speak, do mention that there are challenges ahead, and there are indeed challenges ahead.
So you'd see China continuing to undertake various measures economically to try and hold down particularly inflation.
You know, the goal is really to get moderate growth across the board in all the markets, reduce the levels of volatility, reduce the necessity of ad hoc interventions to support things like energy prices with subsidies, or address food inflation, or to address the rapid appreciation of property prices, the excessive appreciation of property prices. And of course the underlying issue, the amount of credit flowing into the society, which in 2009 really drove money supply very aggressively. In 2010, the moderation policy hasn't really worked that well. Money supplies continued to expand very quickly. So these are sort of the things that regulation has to bring under control.
Of course, one of the big issues facing China in its 5-year plan will be matters to do with green technology. And I believe that's one subject that you have been dealing with, been writing about at some length. Now, is there such a thing, do you think, as a green business without, that is, government subsidy?
This is a great question. We actually run a number of workshops around the year, Deloitte does, and we ran one on exactly the subject. We called it the profit in green. And what we did in that workshop is looked at the 3 stages of corporate thinking. You might call it the evolving mindset. Beginning at exactly the point you just described, being compliant with green growth goals and being compliant with environmental regulations is a cost to business. A lot of businesses went on to the second stage realizing that things like extreme measures to reduce energy consumption actually was a benefit to them and was well aligned with their cost management goals. And now most of the world's large corporations are actually looking strategically at opportunities to make money, either in the new energy space or the environmental space, the recycling space, whatever it might be. So we really are at the profit in green stage. I think the notion that it's just a compliance cost is about 2 or 3 years out of date by now. And I would say that in China you have an interesting combination of resource security issues and commercial issues. You know, for example, what drives the strong interest and huge investment in high-speed electric trains in China is both the desire to reduce carbon emissions, but also the resource security issue that arises from a rapidly increasing bill for imported oil. So China can reduce its dependency on imported oil as it electrifies interprovincial transportation with high-speed electric trains, gets cars off the road for those long distances, gets airplanes out of the sky for those long distances. So we'll see in the next couple of years, you know, the most heavily traveled route in China is Beijing-Shanghai. Beijing-Shanghai is going to be a 5-hour train ride in 2012, and people won't be taking the flights anymore.
Dr. DeWoskin, your paper at the Asian Financial Forum 2011 is going to be looking at investment in the RMB. But does it matter whether the RMB is internationalized if you're really looking at it domestically?
The official expression is an international role for the RMB. Internationalizing is a broader concept. So an international role for the RMB means that the currency will be used across borders, but not necessarily be a truly convertible global currency. And the leaders are very clear on that. The state media in China is quite meticulous about that distinction. But within that, the range of possibilities, a lot of different things can happen. And Hong Kong is actually pivotal, and that's what makes this an interesting discussion for Hong Kong. Hong Kong is thought to be the foreign currency exchange center in the future, you know, in the long discussion about Hong Kong and Shanghai, what roles they'll have. And this is going to be a key issue, is what the renminbi can do, what the renminbi can do in the mainland, what the renminbi can do in Hong Kong, and what the renminbi can do outside of Hong Kong. And Hong Kong's pivotal in that discussion.
So Hong Kong will be at the center of the RMB opportunities that you see ahead?
This is what we're trying to work out in the research we're doing for the Asian Financial Forum. We look at this event as a very important event because it gives us an opportunity to focus some specific research on issues of great importance to Greater China. The thing we're focusing on this year is really addressing that question. If you understand, as we do, that investment in China, pre-IPO investment, going from a number of entities into corporations, increasingly is being done with renminbi funds, then you would expect over the next 12 to 24 months, as these renminbi venture capital funds or private equity funds want to exit through IPOs, that they're going to be exiting on the domestic market. This is actually a fairly significant change because up until recently, the preferred markets were Hong Kong, and then Hong Kong with perhaps ADRs, or maybe Singapore on some occasions, DAX or wherever. But fundamentally, Hong Kong got a very significant share of Chinese companies going public. So one question is, will that continue into the future when pre-IPO investors are sourcing their capital in renminbi and wanting to get their proceeds in renminbi?
Which I presume is what you think is going to be happening.
Well, I think we're going to see the market shift. But there's a long list of pros and a long list of cons when it comes to doing an IPO on a domestic Chinese market compared to Hong Kong. So we don't really know how those balances will work out in the future. In terms of investment opportunities, which was really your question, that's a really interesting question because what I think we'll be seeing is some softening of the wall that exists between the mainland and Hong Kong for investment equity investments. We're already beginning to see it in corporate bonds. We have a lot of renminbi, obviously, in Hong Kong. There are various estimates, but it's usually a little bit south of $100 billion US worth of renminbi in the hands of Hong Kong holders. What can they do with it? Getting access to some of these IPOs, which will occur in the Chinex market and will occur in other A-share markets, could be one way of actually maintaining some balance going forward. So these would be new investment opportunities that the regulators will be considering.
So in attending the Asian Financial Forum 2011, how is it seen in broad international terms?
I think in this region it's a very important event. It's a very important event because it gets the attention of regulators and it gets the attention of market makers. If you look who attends, we have a lot of bankers attending, a lot of investment bankers, merchant bankers. We have a lot of regulators, both on the currency side and the market side. And that's where the action is going to take place. There's a big market story here. There's a big regulatory story here. And in a forum like that, you get a kind of exchange that you don't get in a lot of other places.
All right.